The US dollar's dominance. A technical deep dive into USDCHF's rally. The US dollar is flexing its muscles across the currency markets, and the USDCHF pair is a prime example of this strength. But here's where it gets interesting. Can this rally sustain its momentum, or are there hidden cracks beneath the surface? Let's dive into the technicals and explore the factors driving this pair. Fundamental forces at play. The dollar's recent surge can be largely attributed to the Federal Reserve's hawkish stance. Fed Chair Powell's remarks last week signaled a potential shift towards higher interest rates, sending Treasury yields soaring and boosting the Greenback's appeal. This repricing of interest rate expectations has been a significant tailwind for the USD. However, it's not all smooth sailing. Yesterday's ISM Manufacturing PMI report came in slightly weaker than expected, with businesses citing tariff policies as a concern. The ongoing US-China trade tensions might have dampened sentiment, leaving us wondering if next month's report will paint a similar picture. And this is the part most people miss. While the Fed's hawkishness is a major driver, the underlying economic data might not be as robust as it seems. On the Swiss franc side, the Swiss National Bank, SNB, has maintained its steady course, keeping interest rates unchanged. SNB officials continue to emphasize the high bar for negative rates, with Chairman Schlegel anticipating a slight rise in inflation in the coming quarters. Yesterday's softer-than-expected Swiss CPI report put some pressure on the CHF, but it didn't alter the SNB's stance. Technical breakdown, USDCHF's key levels. Daily timeframe, USDCHF has broken above the critical 0.8073 level, a significant milestone. This breakout suggests that buyers are gaining confidence, targeting the 0.8171 level next. Conversely, sellers will be watching for a reversal below 0.8073, aiming for a drop to 0.7872. This tug-of-war between buyers and sellers is a classic example of market dynamics at play. 4-hour timeframe, a strong support zone around 0.7980, reinforced by an upward trendline, provides a solid foundation for buyers. However, it would likely take disappointing US economic data to push the pair down to this level, as the hawkish Fed narrative continues to support the USD. If the pair does reach this support, buyers are expected to step in, positioning for a rally to new highs. Sellers, on the other hand, will be looking for a break below this zone to increase their bearish bets. 1-hour timeframe, a minor upward trend line is guiding the bullish momentum on this shorter timeframe. Buyers are likely to use this trend line as a springboard to push prices higher, while sellers will be targeting a break below it to initiate a pullback towards the 0.7980 support. The red lines on the chart represent the average daily range, providing context for today's price action. Controversial question: is the USD's strength built on shaky ground? While the Fed's hawkishness has undoubtedly fueled the USD's rally, the underlying economic data tells a more nuanced story. With weaker-than-expected PMI reports and ongoing trade tensions, one has to wonder, is the market overestimating the strength of the US economy? This is a bold interpretation, but it's worth considering. What do you think? Is the USD's dominance here to stay, or are we due for a correction? Share your thoughts in the comments below. Upcoming catalysts to watch. As we navigate this complex landscape, keep an eye on the following economic releases: tomorrow's US ADP report and ISM Services PMI, followed by Friday's University of Michigan Consumer Sentiment Report. These data points could provide fresh insights into the USD's trajectory and potentially spark new trends in the USDCHF pair.